the clarity that has come out of the SEC of late is actually laying the foundation for the next bull run.
Hey guys, welcome back to Library of Wealth. In a recent interview with Bloomberg TV, MicroStrategy's founder and executive chairman Michael Saylor discusses Bitcoin and the recent enforcement actions by U.S. regulators. Saylor says he believes it's been made clear that the crypto industry is destined to be rationalized down to a Bitcoin-focused industry. Last week, the U.S. Securities and Exchange Commission, the SEC, filed lawsuits against Binance and Coinbase, the two largest crypto exchanges by market cap. A total of 19 tokens have been mentioned in the filings. However, Bitcoin isn't one of them. Previously, SEC Chairman Gary Gensler has said that Bitcoin is a commodity. Saylor recently responded on Twitter saying, "Regulatory clarity is going to drive Bitcoin adoption by eliminating the confusion and anxiety that has been holding back institutional investors. Bitcoin dominance will continue to grow as the crypto industry rationalizes around BTC and goes mainstream." To which Saylor states that the next logical step is for Bitcoin to multiply 10 times in value to $250,000. Let's check out the latest interview with Michael Saylor. Don't forget to hit the like button and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
We use a variety of institutional grade Bitcoin companies. We work with Coinbase, and we have worked with Coinbase. We have a number of institutional grade custodians as well. MicroStrategy has been kind of special in this regard because unlike, say, an ETF or the like, we're able to access the Bitcoin spot markets and hold Bitcoin, and we're also able to access the equity and the debt markets as we pursue our Bitcoin acquisition strategy. Well, I think MicroStrategy's view since 2020 has been that the only institutional grade investable asset in the crypto space is Bitcoin. Bitcoin is the universally, globally acknowledged digital commodity in this industry. I think it's pretty clear that the regulators don't see a legitimate path forward for cryptocurrencies like the stable coins, crypto securities like the tokens mentioned. They don't have any love for crypto derivatives. They don't have any love for crypto tokens, and they have a view of crypto exchanges which is far constrained. I mean, their view is crypto exchanges should trade and hold pure digital commodities like Bitcoin. And so the entire industry is kind of destined to be rationalized down to a Bitcoin-focused industry with maybe a half a dozen to a dozen other proof-of-work tokens. I take a different point of view there. I think there's been a lot of confusion because of the 25,000 other cryptos and because of all of the crypto securities that have been angling to position themselves as the next Bitcoin or a better Bitcoin. So now I think that the public is beginning to realize that Bitcoin is the next Bitcoin. The next logical step is for Bitcoin to 10x from here and then 10x again. So eventually, I have confidence that the crypto exchanges will come around to realizing that Bitcoin really is the dominant asset in this space. And their business models are fine when Bitcoin goes up by a factor of 10. And, we can see that the dominance of Bitcoin in the crypto economy as measured by coin market cap has moved from 40 to 48% this year alone. But I think that as the stable coins and the tokens go away, that long-term dominance is headed for 80%. And I think what you got to remember is the reason that we don't have mega institutional money flowing into this space is confusion and anxiety. When that disappears, you're going to see mega amounts of money flow into space, and the business models will be just fine focused on Bitcoin.
Saylor believes in the long-term potential of Bitcoin as an investment, despite the current scrutiny of crypto by the SEC. He says those with crypto assets are likely to trade them for Bitcoin anyways, which is seen as the most trustworthy crypto asset and network. Saylor notes that Bitcoin has been moving up about 50% a year on average over the last 3 years, and the key to investing in Bitcoin is to be able to hold on to it and stomach the volatility.
I think that there's a massive need for exchanges to help people acquire Bitcoin and custody Bitcoin, especially as the pension funds, the insurance companies, the banks, the institutional investors get into the space. companies like Grayscale need to have a custodian. So I see a lot of bullish things for Bitcoin on the horizon. I think the accounting treatment, the upcoming halving, the explosion in the hash rate, and also the clarity that has come out of the SEC of late is actually laying the foundation for the next bull run. And there is a place for crypto exchanges to help people buy Bitcoin, sell Bitcoin, custody Bitcoin. And I don't think that's going away. I think that's going to be a great business. Well, we're an operating company, so we have a profitable software business, and so we can sweep the cash flows of our software business into Bitcoin. Our aim is to allow institutional investors to get Bitcoin exposure, but without charging them a fee and generating a yield when we can. And because we're able to tap the debt markets, we're able to issue debt. We're also able to refinance or pay back our debt, like when we retired our Silvergate loan earlier this year. We're able to issue equity when it's accretive. We're able to purchase Bitcoin with cash flows when it's accretive. So those are our flexibilities you have as an operating company. If you're an SEC 40 company like an ETP or like Grayscale as a trust, you can't really do those things. And I mean, the result is, Bitcoin is up 55% this year to date. MicroStrategy is up 92% this year to date.
According to Saylor, while strong nation-states may still have fiat currencies, the currencies of most countries will eventually fail. He advises against holding cash that rapidly loses 20% of its value per year. He also believes the recent Bitcoin rally is not merely a reflection of mainstream adoption. Despite recent price gains, Saylor believes that a bigger rally from investors is yet to come. He is confident that when it happens, the leading crypto asset will easily surpass 10 times its current value. Saylor also stresses the importance of properly capturing and cleaning out the crypto and digital assets ecosystem before attempting to revolutionize the entire banking industry. Saylor states that the current economic landscape is not a global financial crisis yet, but rather a localized panic intentionally created by larger banks. He also argues that these banks are consolidating power and wealth at the top, leading to significant income and wealth inequality, and this concentration of power is a hallmark of corrupt societies. When it comes to economic analysis, Saylor believes that the U.S. economy's performance has a significant impact on global markets, particularly cryptocurrency. He points out that the crashes we've seen were necessary to prevent an even larger crash later. Saylor is concerned that the economy may take a while to bounce back if something is broken, but highlights that the U.S. economy is the strongest and where a lot of the money in the market is. With Bitcoin and other crypto markets' future closely tied to the actions of central banks, regulations, and global economic conditions, it's something to watch closely in the next few months. Despite some short-term losses, MicroStrategy continues to remain the largest holding of Bitcoin in the world. Saylor remains bullish on Bitcoin and echoes the sentiment of many high-profile investors, saying that the crash of the US dollar will lead to a rally in Bitcoin, the likes of which the world has never seen. What do you think about the latest interview with Michael Saylor? And how will the banking collapse we're seeing impact Bitcoin? Comment down below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.